Hi, this is Jeffrey Kerr at Kerr Financial Group, and today is June 24, 2022. And lots going on in the markets. I want to cover, a handful of things, but the theme or the message for today is, don't feed the bears and watch out for, bear crossings maybe. We are in a bear market in the capital markets, I think. And the financial media and talking heads, use a 20% down as signaling a bear market. I never really understood why it's 20%, or why isn't it 22% or 25 or 15? 20% seems to be pretty arbitrary, and losing 20% and then sitting and saying you're in a bear market is kind of, I don't know how useful that is, but any case, the markets, the stock markets last week had their worst week in since 2020. The S&P was down 5.8% on the week. The Dow and Nasdaq were both down 4.8% in the week. For the year ending last week on June 17th, the Nasdaq was down 31%, Russell down 26% year to date, S&P down 23%, Dow down 18%. And those are year-to-date numbers. The Nasdaq and Russell both peaked in November, so their losses from the peak are even greater than that. And if you're down 30%, you need a recovery of 43% to get back to just even. And I have a hard time envisioning trades, the movement of the markets going back up 43% from here. I don't think it's going to happen. I think we are in a bear market. I think it's going to be a longer period. I think we've been trained or gotten used to the Fed coming in and rescuing things, and the markets turning and bouncing and going back to new highs. This environment is different. We've got inflation. And even though some of the commodity prices have come down dramatically recently, but oil and some of the energy and I think some other factors of inflation are built in. And secondly, that's the economic growth is slowing, and the Fed's tightening, and they're going to continue to tighten. They raised 50 basis points last week. The signal is at least 50 in July, and then again in the fall. So the point of it is that the Fed is not on the side, we said this before, not on the side of investors currently. And they're going to keep tightening into an economic slowdown, perhaps even a recession, causing a recession. And historically, when that's happened in the past, it's not been good for the financial markets. So I think that, again, want to emphasize defensive and cautiousness for people. I think a couple other signals that came out this week are the Purchasing Managers Index missed earlier this week. It was forecast to be in the mid-50s, came in low 50s, and that's, again, a measurement of purchasing managers, kind of a leading indicator, which was much weaker than expected. And then a couple weeks ago, the Michigan Consumer Sentiment Index was the lowest ever. So the state and the mentality of the consumer is pretty down. And so you think about historic, this index has been going on for years, and through world wars and Vietnam and 9/11 and all the other stuff that we've gone through, this is now at the lowest level. And I think that's significant too for the for the markets and the economy. Also, bond yields. Bond yields and cryptos kind of finish up with. On bond yields, they went up to almost 350 on the 10-year, and that was on the 14th of June. And we're today trading back below 310. That's a huge move in the bond. Doesn't sound like a lot from 350 to 310, but it's a huge move, and have it done in a couple of weeks is very significant. and kind of points towards the maybe a recession and decreased demand for funds and like that. So and it's going to invert the yield curve because if the Fed keeps raising the short-term rate, the in the long term, the 10-year keeps moving down, then the inversion of the yield curve, and that typically, is a signal of a recession as well. And then finally on cryptos, there's been, I'm not an expert and really don't delve in it, but I think there's, the estimates that I saw, and I don't know how accurate these are, but the crypto market was like $3 trillion, and there's estimates of like losses of $1.5 to $2 trillion of that market. At the peak of the crypto market being 3 trillion and it's lost half. Again, those are things that I've read. I'm not so sure, but clearly there's been a lot of carnage in the cryptos, and I think that's going to have an impact on people's mentalities and risk tolerances too. Because even if you're extremely wealthy and you lose 100 million, for example, may not have a material impact on your lifestyle. You're not going to miss a mortgage or a car payment, but I think it has an impact on your choices and the way you conduct your life maybe, and no one likes to have a losses like that. So again, I think that don't feed the bears. Be careful out there. If I can help. And even on accounts that aren't with me or any questions or comments, please reach out or email, call, text, or whatever. Good luck out there. Thank you.